Welcome to our video on the credit crisis of 1772, a little-known but significant event in American history that played a major role in the lead-up to the American Revolution. The crisis began in London and quickly spread to the American colonies, causing widespread financial hardship and economic uncertainty. In this video, we'll take a closer look at the causes and consequences of the credit crisis of 1772 and its impact on the colonies. The credit crisis of 1772 began in London with the collapse of the Ayr Bank, a major lender to the American colonies. The bank's failure caused a ripple effect throughout the financial system, leading to a shortage of credit and a freeze on trade. This had a devastating impact on the American colonies, which were heavily dependent on credit and trade with Britain. One of the main causes of the crisis was the British government's monetary policy. In an effort to pay off its war debt, the government began printing large amounts of paper money, which led to inflation and a decrease in the value of currency. This made it more difficult for colonists to repay their loans, and many were forced to default on their debts. Another cause was the British government's policy of mercantilism, which sought to regulate trade in favor of the mother country. This included laws that restricted American trade with other countries and required the colonies to purchase goods from Britain at high prices. This made it difficult for colonial merchants to compete and led to a decline in trade. The credit crisis of 1772 had a significant impact on the American colonies. Many colonists were left in financial ruin and were forced to sell their land and property to repay their debts. This led to widespread poverty and unemployment, and many colonists began to resent the British government for their economic policies. In addition to the economic consequences, the credit crisis of 1772 also had a political impact. The crisis led to a growing sense of discontent and mistrust of British rule among the colonists. This, combined with other factors such as the Quartering Acts and the Stamp Act, contributed to the growing sense of rebellion that ultimately led to the American Revolution. The credit crisis of 1772 may not be as well known as other events in American history, but its impact on the colonies was significant. The crisis led to widespread financial hardship, economic uncertainty, and a growing sense of discontent with British rule. It was one of the many factors that contributed to the American Revolution and the eventual formation of the United States of America. Thank you for watching our video on the credit crisis of 1772. We hope you have a better understanding of this important event in American history.